livestock side, just keep things simple here as far as these hogs. Just one thing we talked about all last week is the fact that we have these problems with the dark meat. Of the chicken world, you have chicken breast, which is the white meat, the good stuff, the premium stuff that's here for the U.S., and the dark meat, all the legs and leg quarters and thighs, we treat as a discounter product here. And if it's left in the U.S., then it competes right alongside with pork at the grocery counter. One thing we're looking at here is the fact that leg quarter stock, so the amount of leg quarters left over at the end of the month, is now right back at that level we had from 2005 and 6. Back we had all those avian flu concerns, and we weren't able to export. So one problem we have right now is the fact that chicken guys are on a huge expansion kick. It's not 2% like we were expecting. They're now actually up to 4% higher. So amazing expansion kick. At the same time, they cannot work on the exports and get rid of all that excess production. So leg quarter stocks are building and competing right against pork. And once you look at the price end, here's a price chart of just leg quarter prices in the last few months. Instead of rallying like they normally do in the summer, they're actually breaking down. So we're looking at as much as about a 30% discount right now in these lower-end chicken prices, which is hurting this pork. And we did see cash pork prices and cash hog prices break a little bit last week, and we saw futures take a good hard hit as well. So I think we might see some pressure lasting the next couple of days here on this futures end. But for right now, we're not saying that, or we're saying that $80 on the August contract is probably in a good place for a base for a bottom. So we don't think this market's going to break past 80 on the futures, place for a little while here. Over on these on the cash cattle side, kind of opposite situation. One thing we're going to point out is seasonally, we got about a bottom in the cash cattle market right around the second or third week of July. One thing we're going to point out here is, you know what, we've got 3 weeks now of 91 cash cattle trade. They're already talking 91 again for this week. So that'd be 4 weeks. So that's actually some pretty darn good news. While we're not going to call a bottom in cattle yet, we're going to start preparing people for the idea that this market is ready for a bottom very soon. And one thing we're going to do is we're going to start looking at some of these deferred futures. Look at this August right here compared to October, compared to December. There's not much of a premium at all in these back months. I think that's something we need to correct. So we might actually start looking at more of a spread. We're going to buying these far deferreds and maybe selling like the August or October up front. So key thing with the cattle, we are still going down. We have another couple of weeks before we can say the bottom is in. But when we're going to start preparing guys for is the idea that it's now time to start looking northward once this month wraps up.